Shocking deterioration. Bud Light sales hit hard in April amid Dylan Mulvaney controversy. Here are two stocks that are poised to benefit. No matter what your personal view is on celebrity endorsements, there's no denying that their support can significantly boost the visibility of a product. That is the point after all in getting a well-known figure for some promotional activities. But what happens when the chosen celebrity happens to be the wrong fit? Well, Anheuser-Busch can tell you all about that. The Bud Light owner decided to run a promotional push for the beer by bringing on board transgender influencer Dylan Mulvaney, who counts over 10 million followers on TikTok. Mulvaney advertised Bud Light on her feed, and a backlash duly ensued. Turns out the conservative crowd were unhappy with that choice, and evidently there are a lot of conservative Bud Light fans. Calls for a campaign to boycott the drink company did the job, and in April, Anheuser-Busch volumes fell by over 12%, with Bud Light posting what Beer Business Daily has described as a shocking deterioration of 21.4%. Meanwhile, competitors have been reaping the rewards of the conservative ire. Rivals Molson Coors and Constellation notched respective growth of 7.6% and 3.8% during the same period. So, until this controversy dies down and the next outrage kicks off, it might be worth leaning into the stocks already benefiting from the situation. Here they are. Constellation Brands, STZ. In the wake of the Mulvaney fallout, Constellation Brands' top brass must be rubbing their hands with glee. As the importer of the best-selling imported brands in the U.S., Modelo and Corona, the company is already reaping the rewards. Those brands aside, Constellation owns a diverse portfolio of well-known names, including Robert Mondavi, Kim Crawford, Casa Noble Tequila, Svedka Vodka and High West Whiskey, amongst plenty of others. In recent years, the firm has focused on expanding its presence in the high-end beer market, particularly with the growth of the craft beer industry. Furthermore, in addition to its alcohol activities, the company has investments in cannabis and healthcare. Investors did not seem too flustered by the company not being on point with all metrics in the most recent financial report, for fiscal 4Q23. Revenue fell by 4.8% year-over-year to $2 billion, while also falling $20 million short of the forecast. On the bottom line, however, EPS of $1.98 trumped the $1.84 anticipated by the street. For the coming year, Constellation expects EPS to come in the range between $11.70 and $12, slightly higher than the consensus midpoint of $11.80. The company also said it would bump the quarterly dividend up by 11.3% to 89 cents from 80 cents per share. That currently generates a yield of 1.43%. While Morgan Stanley analyst Dara Mohsenian concedes the latest financial statement had puts and takes, there are enough positive developments to fuel the bull case. Taking a step back, there has been a lot of beer depletion volatility the last few quarters, but with solid trends ex-California and assumed California weather normalization going forward, STZ's positive top-line tone and clarity now on margins, we see STZ's 17.1 times CY24 EPE is way too low vs 7% corporate top-line growth, and like the stock here, Mohsenian explained. Margins have been a big focus in recent quarters, but with greater clarity on FY24 and potential outsized FY25 expansion as lower spot costs flow through, we expect this debate to now recede. Putting these thoughts into ratings and numbers, Mohsenian considers STZ as overweight, i.e., buy, while his $277 price target makes room for 12-month returns of 23%.